Yes, Kamali, Germany's two largest lenders, Deutsche Bank and Commerzbank, are in government-backed merger talks, and that news has boosted their shares. Deutsche Bank had been struggling to generate profit, while Commerzbank had to be bailed out by the government after the financial crisis. And those talks that would create Europe's third largest lender helped markets on the continent gain ground early on, although they're now broadly flat. Investors are also looking out for the latest developments on Brexit. Another key vote is expected in the UK at some point this week. China's major indices closed near their highest level since last May. Investors welcomed additional measures announced by the Chinese government to support economic growth. The mood's also positive ahead of this week's meeting of the US Federal Reserve. And in the United States, stock futures are all green too. The S&P 500 posted its best week since November. The markets are reacting positively to suggestions the central bank will keep interest rates unchanged and give a forecast for fewer future increases. Oil prices, meanwhile, are mixed. Concerns an economic downturn might reduce oil consumption have seen them slip lower, but they've been bolstered by news from an OPEC meeting at the weekend. Saudi Arabia, the oil cartel's biggest producer, suggested oil output cuts may need to be extended until the end of this year. And well, for more now on the markets, Neil Wilson joins me from London. He is Chief Market Analyst at Markets.com. Thank you very much indeed for speaking to us today, Neil.
Good afternoon.
So let's talk first about those merger discussions between Commerzbank and Deutsche Bank. What's the outlook for a deal and how have the markets been viewing it?
Well, I think, it's clearly, markets see it as a positive at the moment. The outlook for the deal it looks a bit precarious. I think there's many hurdles to the two companies combining. Number one is the supervisory boards. For Deutsche Bank in particular, that's a 20-strong board. We need all of the investors to come on side, so there's half of the board is made up of union representatives, worker representatives. They're unlikely to go for this deal just because it means job losses, quite large job losses for the banks. The investors need to come around to this deal in order to get it through. So that supervisory board might kill the deal before it gets too much further. And I think whilst there are clear cost savings that the two banks will be looking to make through this deal, actually driving earnings growth is still going to be very tough for a combined entity. So it's early stage at the moment, but I think this one could be a tough one to sell.
OK, and something else moving the markets today is that US Federal Reserve meeting happening this week. What is expected to come out of that?
Well, I think we're looking at clearly a dovish tilt from the Fed. So the minutes from the last meeting in January still showed some indications that policymakers are prepared to raise rates as long as the economic data continues as forecast. But I think we'll be looking for the dot plot, those signals of where they think interest rates will be throughout 2019, 2020. The most recent set of dot plots came out in December, so we expect those to come down maybe just a touch, just to reflect the more dovish language that we've seen out of the Fed lately. And whilst there are still one or two Fed policymakers who do think that another rate hike might be warranted this year, there's probably not enough of those on the FOMC to get that through. So I think we're looking really for confirmation that the Fed won't hike again this year, and also some indication on the balance sheet reduction program, so as it rolls off those bonds, the quantitative tightening process as it's known. We're looking for that, probably some announcement on that to come to an end at some point this year.
And just briefly, OPEC met over the weekend. What's next for the oil price, do you think?
Well, it's broken out from its trough. I think there is probably some more upside there, just with the OPEC seemingly very, very committed to these production cuts and saying that they'll cut further into 2019. Russia also very much complying with its expected cuts. And I think we've seen the rig count in the US actually start to come off a little bit lately. So there could be a bit more upside there for the oil price, but it all depends really on just how committed OPEC is and just to what extent the oil, the loss of oil from Venezuela and Iran, what sort of impact that's actually having. Hence why they pushed that meeting back in April, the planned meeting. They've cancelled that and now just going to look to the June meeting. So we've got a bit more uncertainty until June, but I think probably there's some more upside there.
OK, Neil Wilson from Markets.com, thank you very much for joining us from London.
Thank you.
Now to other top stories from around the world. Malaysian prosecutors have said they would issue summonses to Goldman Sachs' London and Hong Kong units, requiring them to respond to criminal charges filed against them. A new pre-trial hearing has been set for June the 24th, after only one of 3 accused units of the American investment bank appeared at Monday's hearing for its role in the 1MDB money laundering scandal. Malaysia is seeking $7.5 billion in reparations from Goldman Sachs. And US ride-hailing platform Lyft has said it expects to raise as much as $2 billion in its upcoming initial public offering. Lyft suggested a price range of $62 to $68 a share for the 30.77 million shares it's offering. The San Francisco-based company is seeking a valuation of around $23 billion. And you can tune into Money Talks at 17:30 GMT for analysis of how Facebook and other social media platforms are looking to moderate hate content after the deadly attack on 2 mosques in New Zealand. And we'll have other business and economic news happening today. That is all from Business for now, but here is Robyn with the sport.